All right, excellent. So this is the Tax and Business Basics Strengthening Your Business webinar. Thanks for coming. What we're going to cover today from the Idaho State Tax Commission point of view is permits, what you need as far as permits and where to get them, what you need to know about when you start selling products. When you start hiring people, you need to know the differences between having employees or independent contractors, what to do about tax withholding, some information about income tax and the forms that you're going to need to know about, and then some information about electronic access to tools that you have that would make your life a lot easier. So that being said, we're going to start with, if you're just getting ready to start up a business, we kind of recommend this timeline. One of the first things you want to do is register and name your business with the Secretary of State. And that is at business.idaho.gov/register-a-business. It does cost a little bit to register your business. That cost varies depending on what kind of business it is. So I would do that. The next three, I would get an EIN if you want one. Now, an EIN isn't required unless you have employees. But if you don't have one, you'll need to use your Social Security number for business reasons, and I know a lot of people don't want to do that, and I don't blame them. The nice thing is that the EINs are free, and they're easy to get, so we recommend one even if you don't really need it at this time. And just as an aside, some banks require it if you want to get a business loan. They require an EIN. The next thing you want to do is apply for your permits at tax.idaho.gov/IBR. Now we're going to go into detail on how to do that here in just a second, but you're going to want to get started on that pretty early because it takes some time to get your permits. Once you have your permits, then if you're going to use TAP, I would start that getting that account created on TAP. And again, that's also going to take some time, but you can't start it until you have your permit numbers. So while you're waiting for 3 and 4, you might as well get a website set up and then open up a business bank account. So most of this is self-explanatory. You do it through the banks, get a web developer to set up a website, that kind of thing. I'm going to talk about the permits next. So to get those permits, or where to get your Idaho accounts, you're going to go to tax.idaho.gov. This is kind of the home page for us. This is going through an update, so it will change maybe in the next month or so. Once you get here, hover over Online Services, and you're going to see where it says Apply for a Business Permit. I want you to click there. Once you've clicked on that, you'll be taken to this screen, and this is towards the bottom of that screen. You see where it says To Apply. I want you to click. You have two options here. You can click where it says Idaho Business Registration or IBR application and then do it electronically, or you can print out and fill out the PDF and then send it back to us, whichever one you prefer. The second option is going to take longer. So if you want to get it done electronically, just click on the first link. And that's what we're going to do in our example right now. So we're going to click on that link. It's going to take us to this page. This is the beginning of the Idaho Business Registration page, and it's the welcome screen. Gives you a little bit of information about what's going on. It tells you that the form is going to go to the Idaho Department of Labor, it's going to go to the Idaho Industrial Commission, and the Idaho State Tax Commission. If you need permits or accounts from any of those departments, this is when you will get them. And just be aware that the Tax Commission gets it last. So you may get your permits from other agencies first, and it will take several weeks to get all your permits. When you're ready, we'll just go ahead and click on that little blue box down there in the bottom, and we go to this screen. Now, this screen is kind of giving you some basic information that you may need, depending on what kind of business you're trying to set up. You probably won't need all of this, so things like a board of director member information. If that's not how you're set up, then obviously you're not going to need that. But when you're ready, we're going to go ahead and click on this blue box in the bottom, and then we go here. This is where the magic happens. The first time you come in here, you're going to want to create a new account. So you would just click on that link, put in your username and password. The form will open up, and it will be a series of questions. The questions don't have a right or wrong answer. They're just trying to ask questions to determine what kind of business you're setting up. And how you answer those questions kind of determines what questions are next. And so if you go through and you say, yes, I'm going to have employees in this business, then it's going to be sent to the Department of Labor. You're going to get a withholding account, that sort of thing. It can be a little long, but it's important just to go through and just answer the questions, and it gives you an opportunity to think about your business kind of in more detail than you may have done so before. If you've already completed the application and you just want to check on it, you can come back where it says return to completed registration. If you just put in username and password, you can pull up the account. You won't be able to change anything, but you can pull it up. So that being said, let's say that you're starting a business. It is just you at this point, right? It's a sole proprietorship. It's a car detailing business, and it's just you. So you're setting it up. You go through. You answer the questions. No, I'm not going to have any employees. It's just me. So they go through and they process it that way. Hi, Irene. I'm going to mute you here. Hang on just a second. You're doing really good with your business. Things are great. You're getting a lot of business, so you're like, you know what, I need to start hiring some people. So you're going to come in here and say, okay, well, I need to change that application because now I'm hiring people. You can't change when it's already been created and submitted. So what you'll do is you'll just come back here, create a new account, just go through the process, and then answer the questions about the hiring employees this time, because you'll change them. It won't duplicate everything, so it'll be fine. I know some people just get confused about that. So that's how you get your permits, through the Idaho Business Registration. Okay. So, tax collection. Idaho has a 6% sales tax on all tangible personal property. This tax is not part of your income. It belongs to the state, and you are just collecting it for us. Okay, great, Steve. What is tangible personal property? It's basically anything that you can touch, you can pick up, carry, eat, or otherwise handle that is not real property. Generally speaking, services aren't taxable in Idaho. Okay, so we're looking at taxing tangible personal property, or you may hear it called TPP sometimes. All right, great. So we've identified what we're taxing, but who needs a seller's permit? If you have any sale of tangible personal property in the state of Idaho, we would be required to collect sales tax unless there's an exemption. Okay, and then so you would need that seller's permit. The seller's permit you get from the Idaho Business Registration, or the IBR. Okay, let's talk about some circumstances where you may not collect sales tax. One of the big ones we have here is shipping goods to another state. Because we have some states around us that don't collect sales tax, this happens periodically. So you're going to charge Idaho sales tax if the buyer arranges shipping or the buyer picks up the goods. You are not going to charge Idaho sales tax on goods that were delivered to another state by your company vehicle or via common carrier. The key difference here is where the customer takes possession of that product. If you deliver it or arrange shipping to another state, you still have possession of it until it reaches the final destination. The transfer of the property actually takes place in the other state, so there is no Idaho tax due. There may be tax due from that other state, but it's not Idaho tax. Now, if the buyer comes to Idaho to pick up the goods, or they arrange for the shipping, they took possession of it in Idaho, and so that transaction is taxable in Idaho. And just a note that Idaho does not exempt buyers from non-taxing states. So if they buy products in Idaho, they're subject to sales tax in Idaho. Does that make sense? So that being said, something to be aware of is if you end up shipping a lot of goods to a specific state, you need to research that state's threshold for sales tax. So there was a decision a few years ago. It was Wayfair, the company, versus South Dakota. And that decision allowed states to collect sales tax for items shipped into their states. The problem is each state has different requirements. Some states, it is the first dollar of sales in that state. Some other states, it might be you don't collect sales tax until after you hit $10,000 in sales. It varies from state to state. So you need to do a little research and figure out where you're at on that. The other thing to note is if you're using a marketplace to sell your goods, see if they're already collecting sales tax for you, because most of them do. Okay. So let's talk about your invoices or your receipts. This is kind of a proof of accounting. So you want to make sure that there are certain things on your invoices or receipts. It needs to be noted that the sales tax has to be a separate line item. Includes tax isn't acceptable. And you can't advertise that you're going to pay the tax for the customer or advertise that there is no sales tax. Okay. So let's look at a receipt here just to walk through this. So this is a sample invoice, could also be a receipt from Awesome Auto Repair for a brake job that was done. The tangible personal property that was sold were 2 brake pads at $50 a piece for a total of $100, and 2 brake shoes for $100 a piece for a total of $200. You'll notice on the invoice that both of those have a T where it says taxable, so those are taxable. And then they only charged $100 for labor, so that $100. So their total is $400, but $300 of that is taxable. So 300 times 6% is $18, and so the total due is $418. So that $100 labor charge wasn't taxed because labor is typically not taxed. That's how you want everything to be listed out for you. It protects you, so it's proof that you charged the right sales tax and you collected it. And then it also allows you, if for some reason something comes back and you need to make some adjustments on your reporting, you have record of what that adjustment was. Because anytime we do adjustments when we do our reporting, we need to have documentation for that. Okay. The nice thing is that if you have accounting software, it does a lot of this automatically, so that's good. And that is something I'd like to point out. I would, if you haven't done so already, I would recommend getting a decent accounting software program, QuickBooks, Sage, any of those. They're going to make your life a lot easier because a lot of them already have tax forms for the state already built in. They will automatically format them, populate the data, and just print it out so you can submit them. Accounting software makes life a lot easier from someone who has an accountant as a wife. She loves the accounting software. So, exemptions. I know we brought those up a little while ago. There's some things you may see while you're doing business, or there's things you may use while doing business. If you're buying for resale, you're wholesaling or you're producing items for sale, or you have a statutory exemption, you can sometimes buy your products exempt from sales tax using this form. It's called an ST-101. You may also receive these forms from customers. If you do, it's basically saying it's not required to collect tax for this sale, is what this thing is. I'm going to go through this in a little bit of detail. Not a lot, but a little bit. There's a total of 4 pages of instructions that go along with the ST-101. They explain quite a few of the exemptions that are in place. So things like buying for resale, what's included there, producer exemptions, exempt buyers, things like this are all listed in here. I would recommend, you don't have to, but my recommendation would be to go to tax.idaho.gov, go to Forms, find an ST-101, and print that out. So you have a copy of it, so you can look at it and see what it is, and you're familiar with it in case somebody comes to your business with one of these things, and so you're already passingly familiar with it. You may also be able to use it. So if you can use one of these things and you qualify, then you can purchase goods for your business. You may not have to pay sales tax for it. So how do you fill one of these things out? For most buyers, you're going to fall into one of the first 2 categories on the page. You only need to fill out one section. So even if you have a seller's permit and you're a producer, you just need to fill out one of these sections. So either section 1 or section 2. If you are buying items for resale, you'll select that first section. If you sell retail in Idaho, you'll need to include your seller's permit number. And we get the seller's permit number from the Idaho Business Registration, remember. And sellers qualifying for other exemptions may not need that permit number. But you just fill out the top part, and then fill out what your primary nature of business is, the products that you sell, rent, or lease, and then put in your seller's permit number. The other section is the producer exemption number, or section. So if you're a producer, you may not need a seller's permit number to get the exemption. You would still need one if you're going to make sales. But this will allow you to purchase supplies without paying tax on them. It doesn't apply to everything that you buy, only to your supplies directly related to your business. And if you have any questions of whether or not they apply, I would call us and ask us the question, because it gets... my saying is that anytime that you ask the tax commission a question, the first answer is, it depends. And it's not because we're difficult, although sometimes we are, but it's because there are a lot of moving parts. So the initial question may seem very straightforward, but there's so many moving parts underneath it that we have to ask sometimes quite a few clarifying questions to get to the root and the right answer. So when you do call us or you send us an email and we start asking questions, we're just trying to make sure we get you the right answer. We're not trying to be difficult. We're just trying to make sure that we get you the correct answer, okay? I know it can be frustrating sometimes, but it just seems like a simple question. I have found that it's very rarely a simple question. So that is the ST-101. There is a new form called the ST-103C, which is for real property contractors. So if you're a real property contractor buying for resale or you have a statutory exemption, you can buy your product exempt from sales tax by using this form, possibly. You may also receive some of these forms for your customers. If you do, then you're not required to collect tax for those. This is a relatively new form, so I would go out to the form section, download one of these as well, so you're familiar with it. And these are the instructions for that one. It doesn't have the same 4 pages that the 101 has. Okay. Questions on any of that? Okay. Well, if you have one, just go ahead and type it in there. So let's talk about the reporting. Sales tax is due in the reporting period that sale takes place. You can't defer sales tax, and you're required to file a return even if you haven't had any sales for that reporting period. So what do I mean by sales tax is due when the sale takes place? So let's say you buy a cell phone. The company will usually let you take it with no money down, and you're just going to make payments with the phone along with the phone bill. But you're still required to lay out some money when you pick up the phone, and that is typically the tax, because you have to pay sales tax on the fair market value of that phone because you're taking possession of it at that time. So reporting sales and use tax is going to be done through something called a Form 850. This is what it looks like. I'm going to walk through quite a bit of this form here. The first things you can see kind of in the background is the actual permit number. So this is the permit number that you got when you filled out your IBR. The reporting period, in this case it's September 1st to September 30th of 2013. I could probably update those dates a little bit. And when this is due. And we do honor postmarks on these things, so if you do send it in. So it tells you on the actual form itself when it's due and what reporting period it is. So you just have to pay attention to that. If you don't have this information on the form, don't use it. Go ahead and give us a call, and we can make sure we get you the right one. But let's break out this front section here. I'll show you how to fill this out. So this is what it looks like before it's filled out. We're just going to go through this line by line. The first part are the total amount of sales we had for that reporting period. So this is for September in 2013. We did $1,025 in sales. The next section are any non-taxable sales. So in this case, we had $50 in non-taxable sales. And that $50 could have been somebody bought something from us. They had an ST-101, so a sales tax exemption certificate that they handed you, saying, hey, I am exempt from paying sales tax for this purchase. So this is where you would put that in there, because you didn't collect sales tax on that $50 worth of sales. So you want to make sure you notate that so we're not expecting sales tax money from that. So this is where you would do that. The next line gives us our net taxable sales. It's just line 1 minus line 2. So in this case, it's $975. The line after that are any items that were subject to use tax. Something that's subject to a use tax is something that you purchased, did not pay sales tax on it, but should have. That's a gross oversimplification of that. But in a nutshell, that's kind of what it is. For our example, let's say that we made a purchase of a magazine subscription for $25. We did not pay sales tax on that, and we should have, so we enter that in here. So that puts that $25 in here. So now our total taxable sales for that period is $1,000. We multiply that line by 6%, which gives us $60. So that's how much the tax is that you should have collected. The rest of this are kind of adjustments and things that we can make. I've already kind of talked about it. Nice English, Steve. I kind of talked about adjustments already, but we're going to go through it in a little more detail here. This line, adjustments here. Again, adjustments occur when, for example, you've sold a product and you've collected sales tax on it, and then after you have filed the report, or you've filed this Form 850 for that period, the customer came back and returned the item. So you refunded them their purchase price, but you also refunded them the sales tax. So you've refunded the sales tax, but you've already paid the sales tax to us. So this is where you would take that and put it in here under adjustments. So you would put that money in that sales tax here. Now you would need to give us documentation of that transaction, or that adjustment would be denied. So this is where you need to keep track of your receipts and things, okay? And this, I'm not going to put anything in here for this one, so we're just going to leave it at 0. We have our next subtotal, which is the tax due. We're still at $60. The next two lines are penalty and interest. Unless you know what this is exactly, we recommend just leaving it blank and let us tell you. If you happen to file late, you may have penalty and interest that apply. We suggest that you file the return without including the P&I, and then just let us calculate it for you. And that is because generally we round lower than your accounting software. So we may actually be saving you some money in penalty and interest. So if you had those numbers, you would add them in here, and then that would give us our total due. So when you had the final balance, you just send it along with the form to file your taxes. And again, remember, this is just sales tax. So it's actually money that belongs to the state. We are not taking this from your profits. There's this perception from some people that that's what we're doing, and it's not. So, any questions on that? Okay. The next thing we're going to talk about what happens when you become an employer, because there are some things that you need to be aware of there. First of all, congratulations. It's a big step going from a sole proprietorship to hiring employees. One of the first things you need to do is be aware of the differences between hiring an employee and hiring an independent contractor. Now, you may be tempted to classify your employees as independent contractors. And be aware that the IRS has guidelines for who's an employee and who's a contractor. And in most cases, you're going to have employees, which means that you will need to withhold you'll need to withhold taxes for them. And this is significant because you're required to withhold payroll taxes for employees, but not for contractors. So some people try to just list everybody as an independent contractor, and they're not. And then they get in trouble because they didn't withhold payroll taxes. So these are kind of some of the differentiators between employees and independent contractors. Anita from the Department of Labor is going to go over this in a little more detail when she's here. But for now, let's go through this. So once we've hired employees, we need to start talking about income tax withholding. Income tax withholding shouldn't be confused with your business's income taxes. The withholding, again, is not your money. It's it's money that the employees earned, but you're sending part of it to the state and to the IRS on behalf of them so that they don't have a huge tax bill at the end of the year. As someone, when they were younger, who decided that it would be cool to put that I was married, filing jointly, and I had 27 dependents on my first job because I don't want them withholding my money. This way I can keep it all. That was a hard lesson to learn at the end of the year when I had to file my income taxes, and nobody had taken anything out, so I was responsible for the whole thing in April. Learned pretty quickly that I don't want to do that. So when do you need a withholding account? If you have one or more full-time or part-time employees working in Idaho, you need a withholding account. And you need to get that withholding account established before you hire your employees. And again, remember, it can take several weeks to get that permit. And now it's quiz time. Where would you get this withholding account or this withholding permit? If you know the answer, if you could just type it in the chat, that would be fantastic. No one? Everybody is shy today. You would get this account or this permit through the Idaho Business Registration off of tax.idaho.gov. Okay, so what do we need to withhold on? So what kind of income do we need to withhold on? Well, obviously wages. So all wage income is subject to Idaho income tax if the employee earns that income while they're working in Idaho. This includes employees who aren't Idaho residents, employees who are family members, people who work here for only a day like performers or athletes, people who aren't citizens of the United States unless they're exempt from federal withholding. Income earned in Idaho is subject to withholding. Okay? It's a basic rule. Other things, wages that are paid in kind. In-kind wages are wages that you pay employees in something other than money. Example, things like goods, lodging, food, clothing, services, company vehicle, that sort of thing. Generally speaking, you have to withhold Idaho income tax on the fair market value of such payments when you make them for services employees provided in Idaho. There are some exceptions to this. You don't have to withhold Idaho income tax for food or lodging provided for the employer's convenience if the food or lodging qualifies for an exclusion from wages under federal law. Okay. Also, you need to withhold on things called supplemental wages. These would include things like bonuses or commissions, overtime pay, severance pay, awards or prizes, any back pay or retroactive pay. You need to make sure that you're withholding on those as well. Now, there are some things that you don't have to withhold on. You have to have a withholding account and you have to report payroll, but you don't have to withhold Idaho income tax if the employee isn't a resident of Idaho and earns less than $1,000 in Idaho in a calendar year, or if you employ agricultural laborers who earn less than $1,000 in a calendar year, or if the employee is exempt from federal withholding. Also, if you have an employee who is an enrolled member of a federally recognized American Indian tribe, they earn income on a reservation, and they live on a reservation, you do not have to withhold. It doesn't all have to be the same reservation. Also, if you have an employee who gives you a form ID W-4 stating that they are exempt from withholding because they didn't owe Idaho income taxes in the previous year and they don't expect to in this year. Now note that this exemption is only good for the current year, so they'll have to give you a new one for each year. But what happens if they're wrong? If they give you an ID W-4 stating that they're exempt, and so you don't withhold anything, and then it turns out they're not, well, then it's on them. They have a really big tax bill. All right, let's talk about new hires real quick. You need to report all of your new hires to the Idaho Department of Labor within 20 days of hiring. And that website to do that is labor.idaho.gov. Okay. There's some paperwork that needs to be filled out. So there's the I-9, which is an employee eligibility verification. I think we probably all filled those out by now. Each employee has to fill one out. Information for this can be seen on uscis.gov, which sounds like a crime drama from CBS. And the I-9 is just a form that shows that the employee is legally allowed to work in the United States. They have to show you 2 different forms of ID. The other thing is a W-4. The IRS and the state have their own W-4s. It used to be just one, but it split a little while ago, so now there's one for the IRS and one for the state of Idaho. And those numbers are probably going to be different on them. So when you're having employees fill these out, make sure that they follow the instructions. Filling out forms incorrectly may result in too little being withheld, and then the employee would owe a large amount of taxes when they file, or people say, my experience. So the tax withholding is going to be based on what they put on those W-4 forms, and they just need to complete both the IRS form and the state of Idaho one. You can find the W-4 for IRS if you go to irs.gov, go to Forms and Instructions. It's usually right at the top because it's one of the most common ones that they use. For Idaho, it varies. When I did this screenshot, it was on the front page. But this page is a living document, so it changes a lot. There's 2 ways to do this. You could go to the very, very top, right above Idaho State Tax Commission, where it says Help and Search. You can type a search and do W-4, or you can go to Forms and go to W-4 there too. Those are the places that I usually go, and I find it pretty quickly. Now, when they do the new website rollout, which I haven't actually seen yet, I know that there was a sample of it that I haven't seen it yet, this will look a little differently, okay? But it's supposed to be easier to use. So for Idaho, this is kind of what the W-4 is going to look like. This is the part that the employee should give you for your records. You don't send this to the state or to the IRS. You're just going to use it when you're preparing your payroll to know how much to withhold, and then you can keep this for your records. The instructions start at the top of this page, and then they go to the back. So just make sure the employee starts at the beginning. Because, again, you want to make sure that they're filling this out accurately for them so they don't end up with a big surprise. Okay. Any questions on any of this? Okay, so let's talk about some forms. So we have a couple. We have the 910, which is a payment voucher. Depending on your volume, you may be required to file more or less frequently than monthly or quarterly. And the due date will actually show up on the filing form, so that's nice. And then, again, you're required to file even if you didn't have anything to report. And it's just because we need a report to make sure that it was actually done and that we didn't just forget. Okay. So this is the 910. It's going to look pretty close to the 850 that we looked at a little earlier. That is a nice thing about our forms. We try to keep them consistent. So the Form 910 is the withholding payment voucher. The first thing you'll see here is your permit number or account number, if you will. Also, again, like we had with the 850, we have what reporting period this is for. For this one, it's December of 2020. And then when it is due. In this case, it's due on January 20th, 2021. And just like before, we do honor the postmark. So if you're actually sending this in and not using TAP, as long as it is postmarked by the due date, you should be okay. So here's your permit number. Here's the reporting period. This is the due date. This is the payment amount. So note that this is a single payment, so it's not a payment for each employee. We don't track what each employee has withheld using this form. So this is a lump sum. So where does this come from? It's the total amount withheld for state of Idaho income tax for all employees during that period. Your payroll software will be able to generate this number for you. Okay. And then this. This looks an awful lot like the numbers on the bottom of a check, if you remember checks. And that's because that's what this is. These are basically the rounding numbers for your account. So when we get this payment, we know where it is supposed to go. So if you don't have this on your payment voucher, please don't use it because it won't go where you want it to. If you can't find this form, or this part got torn off, the dog ate it, and whatever, contact us. We can get you the right ones because we want to make sure that when you file this, that it goes where it is supposed to go and we don't end up sending you letters. Any questions on the 910? Okay. The next form we're going to talk about is 967. And this is the annual withholding report. And it does two things. It serves as a reconciliation for Idaho income taxes withheld on the W-2 forms. It reconciles those with the 910s. And then it serves as a cover sheet for the state copies of the W-2s. And this is what this form looks like. The nice thing is that you should be able to have all of this information readily available through your accounting software. And then again, you just send that in to us. So here's a W-2. W-2s are the document that you give your employees so they can complete their tax returns. The Form 967 and the W-2s can be filed electronically by uploading something called an EFW-2 file. And this is generated by your computer software. If you have more than 50 employees, you are required to file electronically with us and with the IRS. Okay, so that's something to be aware of. And then just the highlighted portion of the W-2 are the things that the state is looking at. So that was a ridiculous amount of information that I threw at you in 40 minutes. So here's a kind of a summary of what I just talked about. Some things you need to be aware of. You need to be aware of the difference between an employee and an independent contractor. Make sure you're picking the right one. You need to report employment to the Idaho Department of Labor. Make sure you have employees fill out their I-9s and their W-4s. Make sure you have a withholding account, and you get that through the IBR. And then be aware that the 910 works with the withholding account to send in state income taxes withheld. And the 960 is the annual form with the W-2s to report yearly to the state. Now, the nice part is a lot of this stuff can be filed electronically, which makes life pretty easy. You can file your 850s, your 910s, and your 967s electronically free of charge. You don't have to worry about post dates. You don't have to worry about stamps. If you have 50 or more employees working in Idaho, you have to submit W-2s and 967s electronically. You can't file individual and business income taxes using TAP, but you can do a lot of other stuff with it. All right, so I just dropped something on you. TAP. What is TAP? TAP is a taxpayer access point. Okay, it's that little green box on the front page of tax.idaho.gov. And again, that icon is going to change when the website updates. So if you're going to use TAP, and I would recommend that you do, I would want you to get that TAP account set up as soon as you get your permits. You have to have the permits before you set up the TAP account. And because we have some security procedures that take some time, I would expect a week or two before you can actually complete the TAP setup, okay? But once you have your TAP account all set up, there's a lot of stuff you can do in here. You can e-file your sales and use taxes, your travel and convention taxes if you have any auditorium taxes, or auditorium district taxes, sorry. If you have withholding taxes, you can e-file those. Your IFTA reports, if you have any, or your beer and wine taxes, you can e-file those. You can also make payments through here. So again, sales and use tax, your travel and convention taxes, auditorium district taxes, your withholding taxes, individual and business income taxes can be made, the payments can be made here, as well as beer and wine tax payments. Some other things you can do. You can validate permits, so seller's permit numbers. If somebody gives you an ST101, you can always validate that permit number by typing it in TAP and seeing if it's actually valid. So you can do seller's permits, cigarette permits, or tobacco permits. So it does a lot. There's a lot going on in that portal. What you can't do is you can't apply for a permit. You can't amend a return, and you can't file income taxes through there. So that first one, applying for a permit, where do you go for that? This is like the 10th time I've said this. Oh, Donna has a question. Again, if you're typing things in, make sure that you put them in all participants so everybody can see it, okay? Donna said, for a licensed massage therapist working out of a home, is a business permit required? I'm going to let Patricia answer this. PJ, you with us? She may not be with us. Hey, PJ? So one of those things, it depends, is probably the answer, Donna. Looks like PJ's not here right now. She's one of the tax experts for us. Let me ask, and then I will respond back with an answer, okay? I'm thinking probably yes, too, but there's probably some mitigating factors in there. So I'll ask her when she gets back online, and then we'll get an answer for you, okay? So applying for a business permit, that question I asked earlier, again, IBR. The reason that I'm hammering that so hard is because that's one of the top calls and emails that we get. Hey, I'm trying to get a permit for this. Where do I go for that? And it's, oh, yeah, her headphones. It's going to go through the IBR. You can't do it in TAP. So, yeah, Patricia said the massage therapist has an occupational license, and we don't require one due to it being a service. Oh, well, there you go. That was a pretty straightforward answer. Okay, we're going to do a little discussion about income taxes. So far, we've discussed topics that relate mostly to the Idaho State Tax Commission, and so questions about those topics can be directed towards us. Okay? And I'm going to have contact information on the last slide here in a little bit. But there are a few items of importance that are from the IRS, and I'm just going to go over some of this information so that you're aware of it, because I don't want it to surprise you. Okay? The first thing is something called self-employment tax. When you're self-employed, you pay both the employee and the employer portions. The payroll tax is due on the first dollar of profit for a sole proprietor. There is no standard deduction applied. And the payroll tax is going to be 15.3%, and that's on profit. It's not the same as income tax, but you report it and pay the payroll tax with your federal income taxes. So what is this self-employment tax? It's this. So self-employment tax includes FICA, Social Security, and Medicare. And you have to pay this on your own if you're self-employed. So if you're starting a business as a side business, Even if it's a side business, you still had to put this money aside. And again, this is 15.3% of your profit, okay, not your sales. When you're employed by another person or another company, usually those taxes are split between the employer and the employee. But if you're self-employed, you need to pay both sides of it. And again, this is often paid quarterly along with your estimated federal taxes. And again, this is through the IRS and not Idaho. So if you do have questions about this, I would go to irs.gov for that. The nice thing is that there are quite a few deductible business expenses. The IRS states that many of your expenses for running your business can be deductible. And business expenses that are deductible must follow the items that are listed here. So they have to be incurred with connection with your trade, your business, or your profession. They have to be ordinary and they have to be necessary, and they must not be lavish or extravagant under the circumstances. So if you have a cupcake business, and you're like, it would be really cool if we delivered cupcakes, so we started that, and then you're like, it'd be really cool if we delivered cupcakes in a Lamborghini. Well, they may think that buying a Lamborghini as a delivery vehicle for cupcakes may be lavish or extravagant under the circumstances, so you may not be able to deduct that. So Lynette has a question here with the self-employment, I believe. Does this apply to a person that is self-employed but provides services instead of sales? And again, services are not taxable in Idaho, but check the sales tax hub in tax.idaho.gov. Again, I think part of it depends on how that's listed. If you're selling anything else along with it, that may affect it. So yeah, you might want to do some research. When it gets to that, check on tax.idaho.gov. Oh, yeah. Thanks, Patricia. I'm talking the same time she's typing. Okay, so yeah, don't buy a Lamborghini and expect it to be tax deductible. So, the Federal Form 1040 Schedule C. There's a lot of different forms for reporting your business expenses as a tax deduction, and it's important that you do research to verify which form matches your business. Sole proprietors will report their taxes on their personal returns, while other business types will file out a separate return. For sole proprietors, typically it's Schedule C. And this is kind of what it looks like. Part 2 of this form is going to show you the different types of business expenses that you can report. Other forms for other businesses may have a similar layout, but with different line items. And again, this is through the federal government. So if you have any questions about what to put in here, I really recommend talking to the IRS, okay? Or to an accountant who may know. So the last part, I'm almost in here, and then it's Anita. So the last part would be record keeping. There are some records that you want to keep for at least 4 years. So tax agencies like Idaho and the IRS can normally audit back 3 years from the current year. However, if you've been doing business without permits, we can go back 7 years. Okay, so make sure you have your documentation. So things like receipts, check registers, invoices for sales and purchases, and your tax returns, I would keep those for at least 4 years. There are some records that you want to keep for more than 4 years. Things like payroll records, contracts. Contracts should be kept for 4 years following the close of that contract. I would keep exemption certificates until they're revoked because they don't expire. For payroll records, here's what you should include in your payroll records. You should have the name, address, and social security number of the employee, the dates of their employment, the wages and taxes withheld, the hour and work location, and then the W-4s, W-2s, any 1099s or I-9s that you have for them. Keep that information for at least 4 years. You may want to keep it longer. It doesn't have to be physical. It can all be digital. You just need to be able to pull it up. Okay? Any questions on that? Okay, well there are a lot of ways to get a hold of us. We're on Facebook and Twitter, Instagram. I've never actually visited us on Instagram. We're on LinkedIn. We're also on YouTube, and there is a lot going on in YouTube for us. We do a lot of videos. Some of them are Tuesday Tax Facts. When I am done with recording this entire webinar, I will post it out on YouTube for you. So I would check YouTube a lot. We have a lot of great information out there. We also have a newsletter. So tax.idaho.gov/getnews, you can subscribe to that. You can also call us. Our phone number in Boise is 208-334-7660. Toll free is 1-800-972-7660. We have our website, which is tax.idaho.gov. We have an email address at taxrep@tax.idaho.gov. And then we have a fax machine, 208-334-7846. It may take a little while to get hold of us. Typically, we're pretty busy. So if it's an emergency, you need to contact somebody right away, I would call us, but just be prepared to sit on hold for a little while, okay? Any questions for me? Okay, here's what I'm going to do. If you have any questions, just go ahead and type them out and we'll answer them. But we're going to start. I'm going to give you 7 minutes, get some coffee, walk around the building, do whatever you need to do. When we come back at 10 o'clock, we're going to have Anita from the Idaho Department of Labor, has some great information for you, and then she'll be presenting. Okay? So I'll see you back here at 10. Okay, so that is 7 minutes. Thanks.
In an extension, it goes to our round robin, and anybody can answer. And that's the best way to get a hold of us, because we're often on the phone or we've stepped away for a meeting or some reason. So you can get help faster by just calling the phone number and not the extensions, but there they are. And we don't have to work on just our area. So I often handle wage claims throughout the state, as does everyone else. This just happens to be where we are located. All right, and so what do we do? Well, we administer the labor and wage payment laws. So we specifically look at, are people being paid properly on time? Are they being paid at least minimum wage? And then we also handle farm labor contracting laws, and I won't be going into that. Now, what exactly are wages, and what specifically do we look at? So wages can be salary or hourly. They can be by piece rate. They can be commission. We also handle bonuses, vacation, or any sort of PTO, tipped wages, and obviously minimum wage, which is still $7.25 an hour. And let's see here. So one of the first things that we have to consider when somebody does file a wage claim, and you might first be asking, well, what is a wage claim? Well, if somebody hasn't been paid properly, they feel like they haven't been paid properly, that they're missing some wages that they're due, they can file a wage claim and we'll investigate the matter. The first thing we have to ascertain is, do we even have jurisdiction? And so we have to first look and say, were you really an employee or were you an independent contractor? Because an independent contractor is a business. And so it would be a business-to-business relationship, and we don't have jurisdiction of those. You'd have to go through court. But if an employee, if it truly is an employee-employer relationship, now we can get in the middle, and we try to mediate the claims versus having to write a legal decision. It works better for everybody involved, and anyway, so the work also has to be performed in Idaho. So the person could live in another, or I mean, they could live in another state and travel to Idaho to do the work, and vice versa. The person may be working from home, and for a company, say in Utah or California. But the work is taking place in Idaho because the person is residing in Idaho and doing the work in their home. So then we would have jurisdiction. And the wages that they're owed cannot exceed $5,000. They also, they can't say, well, I'm owed $5,001, but I'll just take $5,000. We can't get involved in those because what they're owed is actually in excess of what we're able to award them. And it also has to be a private sector business, not a government agency. Anything for a government agency would have to go through the U.S. Department of Labor. And by the way, if you have any questions during this, just go ahead and type them out. I'll try to keep an eye on the window over there so that I can answer your questions as we go. So now, back on track here, statute of limitations on wages. If somebody files a wage claim for a specific period of time, then we're going to need to know, have they been paid any of those wages? Because if they have received any of the wages for the period of time they are requesting, then there's a 1-year statute of limitations, and that's based on when they file the claim. And then if they've not been paid any of the wages for the period they're claiming, then there's a 2-year statute of limitations. Statute of limitations means, statute is a law. The limitations means we can't go beyond that. Now, Idaho is a work-at-will state. That means that either party can terminate the employee-employer relationship at any point for any reason. There's no justification needed. You can just say, this isn't working. See you later. Bye. And then that doesn't preclude you as an employer from putting something in your policy that says that you require 2-week notice. If you're going to do that, you might want to call us and talk to us about that and how to make it effective for you, because there's a lot of little caveats in that. Let's see here. If there's an employee contract union. So sometimes there's a contract on that third bullet. Sometimes you'll drop a contract for some reason. And that doesn't make somebody an independent contractor to have a contract, but it can. So that would be something we would look at if a wage claim came up. Let's see. No, we will always look at the contract to see what stipulates, contract or the employee handbook, to see what kind of stipulations are involved in the matter. So, contrary to what a lot of us believe, I was quite surprised when I took over this job to learn that neither Idaho nor the federal government requires any of these things: vacations, holidays, severance or sick pay, breaks, lunch breaks, holidays, pay raises, fringe benefits, and there is no limit to the number of hours someone over the age of 16 can work, or 16 or older, I should say, so over the age of 15. But obviously they have to be paid overtime if it's over 40 hours in a set week. We'll get into that a little more in a little bit. So what is the difference between an employee and an independent contractor? Well, an independent contractor is technically their own business. And so that column on the left kind of defines what an independent contractor is. It's typically project in nature, so you come in and you work on a specific project for a specific amount of money. You send them an invoice to the primary business, and you go about your business. You can hire other people to assist you with your job. I think a really good example might be a graphic designer. They go in and they do somebody's website. They're going to have their own equipment to do this on, and then they'll provide the website to the client, which would be the, quote, employer, except they're not an employer in this case. They're a separate business. And so they're responsible for their own tools and equipment, materials, etc. They can hire other people, and they can make their services available to other people. And like again, it's generally project oriented. Now they become an employee when the when the business, the primary business, controls their work. So if you tell them, I need you to work Monday through Friday, 8 to 5, you're going to come into the office, you're going to use our equipment. This is an employee, you're controlling them. And it gets kind of interesting, some of the stories that we hear along that line. But that's kind of the nuts and bolts of the differences there. Now again, Idaho's minimum wage is $7.25 an hour at this point in time. And minimum tipped wage is $3.35 an hour. However, if you are going to take, that's called a tip credit. If you are going to use the tip credit, one, I would advise you to go out to irs.gov and in their search box, type in the word tips. And they have a ton of really good information that goes into all of the caveats about this. But for our purposes and for the minimum wage law, if you are using the tip credit and paying somebody under $7.25 an hour because they're getting tips, you must consider the amount they're earning in tips because they must be paid at least $7.25 an hour, including their tips. So it's imperative that you track their tips, even if you allow them to take home their cash tips at the end of the day. You need to maintain a record of that so that you can take income tax out and report it. I've never had an issue of somebody trying to use the opportunity wage, but it is something that's available for people under 20 years of age. If it's their first job, you can pay them $4.25 an hour only for the first consecutive 90 days. This is an opportunity for a young person doing their first job to get an idea of how to be an employee, and offers you the opportunity to save a little bit of money because you're training this person how to be an employee. Hours worked. So non-exempt employees means that you must pay overtime. So it's always kind of confusing when somebody says, oh, I'm salary non-exempt, because that's technically an hourly employee. You're just guaranteeing them that you're going to pay them for 40 hours a week, but you don't have to pay them 40 hours if they only work 30. Now, if they are salary exempt, the word exempt means exempt from overtime, and then you must pay them for the 40 hours regardless. So non-exempt employees should be paid a minimum wage for each hour worked and receive overtime payment for anything over the 40 hours. Now, work is defined as being suffered or permitted. Suffered means that you told the person to do this work, and permitted means you knew they were doing the work and allowed it to continue. There are cases, we see this on a somewhat regular basis, where an employee or an employer says, well, the person continued to work even though their shift ended at this time, but because they were working at home, I had no way of knowing that they were continuing to work. Do I have to pay them? You should call us and talk to us so we can discuss this at length. But on the surface, the situation I just said, probably don't have to pay them, but definitely call us and talk to us about this, because that's a sticky situation. If you know they're working and you allow it, then you have to pay them. So allowing somebody to work off the clock is not a good thing. If you know they're working, you have to pay them. Rest and meal periods, again, they are not required by either Idaho or the federal government, but they are typically defined. A rest period or just a typical break is anything up to about 20 minutes, and they can be called back to work during that time. So they're still at your disposal. The break is not required, but that's typically what a break would be defined as. Now, a meal break is usually 30 minutes or more, and they are completely relieved of duties. In other words, they go on a meal break, you get busy, you cannot call them off of that. That's what it means to be completely relieved from work duty. Um, some situations don't permit somebody to actually leave the premises for this, but most of the time you could. And that's kind of the difference between those two things. Meal breaks do not have to be paid for, but they do have to be completely relieved from obligation to work. Now, these next two slides are basically the same. One's wait time and the other's on-call time. And the question is, do you have to pay them for this period? So on call, it's like when we'll use a tow truck driver, for example. Company provides 24-hour service, so you have to have somebody available all the time to take calls. So perhaps this employee has their own tow truck assigned to them that they take home, and you give them a cell phone so that they can take phone calls 24/7. And when they're not working, they're free to do their own thing. They can go to the grocery store, whatever. If they're free to do their own thing, that is not compensable time. So, they complain they have to carry the cell phone with them, so they think they need to be paid, but they're still out shopping or going to a movie or something like that. That's their own time. You don't have to pay them for that. But the minute that phone rings, you need to pay them for that time, be it 5 minutes or 5 hours. So that's the difference there for both wait time and on-call time. Who has control of the person's time and what they're doing? Training time can be a little tricky. Again, if you're considering sending somebody out for training and questioning whether or not you need to pay them, it's probably best to give us a call and talk through the situation. Basically, you're looking at, is the training voluntary, and who is it most benefiting? Travel time. So if think about your normal workday on a regular, Monday through Friday, 8 to 5 job. I leave home, I drive to work, and I start work at 8 o'clock. My drive to work is not compensable. Now, if I need to leave my desk and go someplace, like to do a presentation in person, which I do, that travel time from the office to where I'm doing the presentation is compensable time and must be paid. Now, when I leave that presentation and I'm going straight home and I'm not doing further work, that travel time is not compensable because I'm no longer working. Again, give us a call and we'll be happy to explain that one to you. Overtime is under the jurisdiction of the U.S. Department of Labor. What it requires is that an employer set a consecutive 7-day period in which they account time. Anything over 40 hours is time and a half. You're welcome to pay more, but it must be at least time and a half. And it has to be a set consecutive 24-hour period. Now, this doesn't have to necessarily start at midnight and end at midnight. I have seen cases where hospitals are a great example. They started their work week at, like 10 p.m. on Sunday night. And it ended at 9:59 p.m. the following Sunday night. So it just depends on your situation on what works best for you. Compensatory time is only available to government agencies. So somebody, in order to avoid overtime, you cannot tell people that, hey, you work 48 hours this week and you can work 32 hours next week and you're still going to be paid the same rate. That will not work. It doesn't meet the law. That week that somebody works 48 hours, they must be paid time and a half for that extra 8 hours. You can't roll it over to the next week and call that even. It goes week by week. Now, salary exempt, I talked about that a little bit already. Exempt means they're exempt from overtime. And there's some other things you need to know about that. You can't just call everybody salary exempt. They have to meet certain requirements, like they're an executive, manager, they're administrative, professional computer, or outside sales. So if someone is working in a cabinet making shop and they're the supervisor in a section, depending on what their work is, they may or may not qualify to be a salary exempt employee. I would advise in a scenario like that, you talk to the U.S. Department of Labor because they're the most educated on the details of those kinds of things. But by and large, if somebody's manager or owner, well, owner's different. If they're a manager, they are qualified to be salary exempt. But if they are a line worker, or I call a labor worker, they're probably not qualified for salary exempt status. Again, if you have any questions, U.S. Department of Labor is probably a better resource, but you can call us as well. Now, how do you pay people their wages? You can change things periodically, but I wouldn't make a habit out of it. It's too confusing. Kind of think of this from the standpoint of being an employee. You want to know when your paycheck's coming and how much it's going to be, because you got to pay rent and other things. So the law requires actually that you establish a regular payday, a set payday. So if you want to pay on Wednesday, pay on Wednesdays every week, or bi-weekly on Wednesdays, but make it set and consecutive so people can plan around it. You must pay at least once a month, and that payday cannot be more than 10 days from the last day of the pay period. So if you want to pay once a month and you want to pay on the 15th of the month, the last day that can be in that pay period would be the 5th. Okay. Most people pay bi-weekly, typically on a Friday. And there are companies that pay semi-monthly, which would be twice a month. That one can cause you some accounting difficulties when it comes to overtime, for example, which is based on a 7-day week. Whereas when you're paying somebody twice a month, it's based on a 15-day pay period. Now, the other thing you run into is that a 15-day pay period, the payday may end up on a Saturday, Sunday, or a holiday. The law states that in that case, if the payday is on Saturday, Sunday, or like Monday's a holiday, you must pay them on the previous workday, which would typically be your Friday. So some employers like to say, well, we'll pay you, since payday falls on Sunday, we'll pay you on Monday. The law says you have to pay them on Friday, the last day, workday prior. Now, you will probably run into occasions where somebody wants a pay advance. Maybe they're like out of gas and they just need a little bit to get them through to the following payday. That's a pretty understandable one. Sometimes there are accounting errors made, then you end up overpaying somebody by accident. In either of those two cases, advances and overpayments, you are permitted to take 100% of that back out of the next paycheck. So if you loan somebody, or excuse me, if you did not, we're not talking about loans. If you gave somebody a $50 pay advance to help them out with gas, you can take 100% of that $50 back out of the next paycheck. I highly advise people against paying advances up in the hundreds or thousands of dollars. You risk losing that money or having to go to small claims court to get it back from them if that employee leaves. I have seen that happen where an employer gave somebody a few $1,000s pay advance because they were a great employee, they loved them, and then as soon as that employee got that pay advance, they started not showing up for work on time and being a jerk at work, and the employer was only taking a couple hundred back every payday, and they got about 3 paydays into this and decided this employee was bad and fired them. And so they're out the rest of that money. So it's a bad idea. And then there's the issue of loans. If you're going to do a loan to somebody, you must have a kind of a contract, if you will. Write up something that says, we're loaning you this amount of money, and we're going to take this amount out of each paycheck until it's paid back. Now, you can do that, but then you run into problems with the minimum wage law. So the minimum, I'll go into that in a little more details when I talk about deductions in just a minute. But just know that if you're going to give people money before they've earned it, advance is probably the better way. But give us a call and talk to us so we can advise you on that. Payment of wages. So upon termination, now termination just means you're ending the relationship. It could be that they quit, it could be that you fired them, it could be a layoff. It's all a termination. The law states that the final wage, that all wages due, all undisputed wages due, must be paid the earlier of the next scheduled payday or 10 working days. So, or 10 days, not including weekends and holidays. They typically coincide. 10 days and the next scheduled payday will typically coincide. And the employee can ask for their final wages within 48 hours. We advise people that they can send a text or an email to the employer requesting their wages within 48 hours, and that suffices as being written. And that 48 hours is business days, so it doesn't include weekends or holidays. All right. Now, again, going back to the fact that we're talking about wage claims having been filed. So if we're looking at final wages, we can penalize an employer for not meeting that deadline that we just talked about. We can penalize up to $750 for failing to pay within the 10 days or next scheduled payday or 48 hours. So it's pretty important on those final pay that you get that out to them as soon as possible. And then that's only assessed if we decide that you had some control in this matter and you were willfully not doing it. Okay, withholding of wages. You have to have written permission from the employee to take anything out of their paycheck other than taxes or garnishments. So if a court orders that the wages be taken out, they must be taken out. And obviously income tax is ordered by the government. So those must be taken out. But if you're wanting to take out for anything else, like these examples here, uniform shortages, training costs, damage, you have to have written permission from the employee to take that out. And they still have to have a paycheck that is at least minimum wage. So let me see if that's the next example. Yes, so that's the next example. So here, here we're looking at a situation where somebody's pay rate is $8 an hour, and they worked 30 hours, and the employer wants to charge them for their uniform that they failed to return, and the uniform costs $30. So we have to look and say, does this meet minimum wage, and be able to take the entire $30 out of the paycheck? So at $8 an hour for $30, the person earned $240 gross. Then you want to take out your uniform charges. $30. If you do that, that's going to leave them with $210. So now we need to know, well, how much would minimum wage be for those $30 or 30 hours? Well, it would be $217.50. That's the minimum you can pay that person. Well, that is higher than the $210 that would be remaining if you were to take that uniform charge out. So you cannot take that full $30 out. You can take up to the amount that would leave them with $217.50, but not the entire $30. And that comes into play where the loan payments comes in that I was talking about. So if you've loaned somebody $100 and you are going to take $50 out of their paycheck over the next 2 paychecks, if it's this kind of a scenario, you're going to have to adjust how much you take out of their paycheck. It obviously couldn't be, like in this scenario, you obviously couldn't take the full $50. You'd only be able to take the amount above the $217.50. So you have to set up your loan payments accordingly. Versus an advance, or if you accidentally overpaid them previously, that can be taken 100% out of their paycheck. Now, reduction in wages. Occasionally there's a situation where you may want to reduce somebody's wages because they're not performing up to the standards that you want. You can reduce their wages from the point you inform them of it going forward. So if I tell somebody today, right now, your performance is not up to standard, henceforth you're no longer making $20 an hour, you're only going to make $18 an hour. It starts from that moment going forward. I cannot go back to the beginning of the pay period and say, I'm going to reduce your wages all the way back to this beginning of this pay period because your work has stunk this whole time. Only going forward. There's a way around that that is often tied to giving 2 weeks notice, where you can put in your employee handbook something to the effect of, if you quit without giving a written 2-week notice and working out that 2 weeks, then your wages for your final pay period will be at $7.25 an hour, or it'll be at $10 an hour versus your standard. Something to that effect. Give us a call. We can walk you through that if you're planning on putting in that in your employee handbook. Record keeping. The previous presentation you had, they recommended that you keep records for 4 years, payroll records for 4 years, and that's fine. That works. That's a good idea, except that the law also states that payroll records specifically must be maintained for 3 years beyond the end of that person's employment with you. Now, it can be digital. You don't have to maintain it in a paper form. So if you've got an employee that's been with you for 10 years, you have to have all of those records, at least digitally. Okay. Now, another thing that gets kind of sticky for people is that people are uncomfortable during the interview process talking about wages. But it's important to somebody going into a job because it's an agreement between you and them. So you're saying, this is the job I want you to do, and I'm willing to pay you $20 an hour to do this. And they go, great, I'll work for you. But if you say, well, this is the job I want you to do, when can you start? And they go, yeah, sure, I'll start. You run into some problems because there's not an agreement on how much they're being paid. So be upfront about it. This is what I'm willing to pay you. And especially if you run an ad that says, hey, we're going to pay somebody $20 an hour to do this job. So they come in and they're expecting $20 an hour. But during the interview, you find out that their skill set is not what you are wanting it to be for that $20 an hour. It's imperative that you're upfront with them and say, I'm willing to hire you, but not at the advertised pay rate. Your skill set's not high enough, but I'm willing to work with you, but I only want to pay you $16 an hour. starting, and then we'll reevaluate you periodically and get you some pay raises. Be upfront with people. Be honest. You expect it of them, and so be that with them. All right. This link here on the screen will take you out to a page where you can download the free posters that are required. You will periodically get emails or phone calls or whatever from companies out there that are happy to provide you these beautiful, huge, laminated color posters for $100 each. But you don't have to have that. You can just go out to our website. Those posters are there. You can download them, print them out black and white on 8.5 by 11 paper, and tack them to the break room wall for free. So just know that, because there's a lot of scammers out there. And they'll say, well, these are required posters. Well, the posters are required, but that format is not. The other thing you can download out there I highly recommend, is the Guide to Idaho Labor Laws. It's a 6-page document in layman's terms, so it's super easy to understand, and it covers a little bit of the U.S. Department of Labor stuff, talks a little bit about tipped wage and different aspects. Super easy reference guide. Keep it on hand. Read through it. Just familiarize yourself so that you know you're meeting the standards. It's always available, and you also have our contact information out there on that website. Excuse me. So that's the presentation. I hope this has been helpful to you. If it stirred up questions that you'd like to talk in more detail about, again, I'm going to skip back to that second slide here. Just give us a call or even shoot us an email. Our email addresses are available out there on that website, and they're our names with a dot in between. And you can just give us a call. We'll be happy to talk at length with you about any of these things. And I don't believe I saw any questions come up. If there is, please let me know.
Yep, nothing so far.
All right. Well, I think I'm done then.
Well, thank you, Anita.
Yeah, you're quite welcome. Have a great day.
So let's take 4 minutes, do a little break. So we'll be back here at 10:40, and then we will have Luis Estrada from the Industrial Commission. We'll do his presentation, okay? So we'll see you in about 4 minutes. Well, 3 minutes now. Okay, welcome back, everybody. So let me get Luis here.
Good morning, Steve.
Good morning, how are you?
Good, yourself?
Yep, doing good. Hey, I think the floor is yours if you're ready.
Perfect, thank you. Good morning, everybody. My name is Luis Estrada. I work with the Idaho Industrial Commission, the state agency that administers the Idaho workers' compensation laws. Today we're going to talk a little bit about facts for employers, specifically covering the workers' compensation laws. The presentation is going to be broken down into 4 sections. The first one is an overview of work comp, includes the Industrial Commission, a quick breakdown of us, workers' compensation insurance, and who needs a work comp policy. Second section is your relevant law and compliance processes. It's going to talk about exclusive remedy, requirements for coverage, penalties, costs, and how to obtain a policy. Section 3 is going to be your exemptions. We're going to review the types of employments that are considered exempt by law, as well as the processes for determination, no certificates of exemption, and the application of law. And the last section is your independent contractors versus employees. We'll talk about the applicable statute, the rights and control test, some common misconceptions, and end it off with some costs of misclassification. Workers' compensation insurance law, the underlying principle of workers' compensation law is the existence of an employee-employer relationship. Essentially what that states is the Idaho work comp laws don't come into effect until a employee-employer relationship has been established. a overview of the Industrial Commission. As I mentioned, we are the state agency that is responsible for administering the Idaho work comp insurance laws. We monitor and audit claims of injured workers and conduct judicial proceedings over disputed claims. In breaking down the Industrial Commission, we have different departments. For example, the Employer Compliance Department, which is the department I'm assigned to. We work to ensure coverage is secured to cover every employee. So when claims come in, there's a policy to file the claim against. This helps protect both the employee and the employer. And adding on to that, we have other departments such as our rehab division, which helps injured workers get back to the workforce. Our benefits department handles any insurance claim, issues with insurance claims. We have our HR department, our legal department, our fiscal that handles all the financial side of things for the Industrial Commission. Workers' compensation insurance is a no-fault insurance which provides wage loss and medical benefits to workers with a job-related injury or disease, and it also protects employers from certain liabilities. And that's where the exclusive liability is what it's called, comes into play, where essentially it gives the employer the benefit by having a work comp policy. Your work comp policy will cover for those wage losses and medical benefits for that injured worker, and in return it helps protect you from certain civil liabilities, such as some lawsuits from your employee to the business for reported lost wages and that type of items or things. So who all needs it? Any employer with one or more full-time, part-time, seasonal, or occasional employees are required to maintain a policy unless specifically exempt by law. And that's where those exemptions or certain exempt employments come into play, and that will be covered later on in this slideshow. So an invalid agreement happens when employees, you might have an employee that says, hey, I don't want to be covered by a work comp policy. Well, that is considered an invalid agreement because employees cannot waive their right to be covered by a policy. And additionally to that, it is also illegal to deduct any portion of the cost of the policy from their wages. It's solely the responsibility of the employer to obtain the policy and pay the premium per se for the policy itself. And here's a quick breakdown of some of the work comp laws that we normally work with or work off of. 72-209 and 211, this is your exclusive remedy liability. Exclusiveness of employee remedy, it excludes all other rights. As I mentioned, it's that benefit that the employers get by having that work comp policy. 72-223 is your third-party provisions. Exclusiveness of liability of the employer excludes injuries caused by willful or unprovoked physical aggression by the employer. Essentially what that's saying is if, for example, you have an employee that gets injured on their way to work, in most cases they have a car accident and they get covered by their, in most cases they'll get covered for some medical costs by their own vehicle insurance. Any benefits that have been paid will not be essentially duplicated or double paid out by your own work comp policy. So it gives you that benefit of the doubt to where you're not having to pay twice, essentially. 72-301, security of payment of compensation. This statute specifically talks about the ways to be able to satisfy the insurance requirement, which is one of two ways. The first one being the more common way, which is to obtain a work comp policy from an authorized carrier. There are over 380 insurance carriers that are able to write policies in Idaho. The most common way to do that is by reaching out to an insurance agent. Whenever I speak to employers, I always tell them, hey, reach out to even your homeowner's insurance agent. They can help you with that application process and get you set up with the right policy, or at least in the right direction of which insurance carrier you can apply with. I do want to clarify, the Idaho Industrial Commission does not issue policies. We just administer all of them per se. So we keep the database of everything together to kind of give us an idea who has coverage and who doesn't. But In terms of issuing a policy, we don't do that. There is a private insurance carrier called the State Insurance Fund. They were formerly known as the Idaho State Insurance Fund. They do write about 70% of all the policies for all small businesses in Idaho, and there is a misconception that they are a state agency and vice versa, that we're also associated with them. However, we're not. They're a private entity, so if you ever work with them and for example, they cancel your policy and you explain to them what happened, and we eventually get notified over here in the Industrial Commission, and we reach out to you as an employer to kind of talk to you about, hey, did this policy cancel on purpose, or was it an accidental cancellation, such as a missed payment or some underwriting reason. We, even though you spoke to a representative of the State Insurance Fund, they don't disclose that information to us, so we get that misconception where, hey, I just talked to you guys a couple weeks ago. Fortunately, no, that's a separate entity per se. And the other way that you can satisfy the work comp requirement is to become self-insured, which this one, it's not as commonly seen because it requires the approval by the Industrial Commission and certain other requirements, such as certain amount of payroll. I believe it's 4 million payroll that you need to have consistently, and a couple other objectives, essentially, things to check off that you have to be able to meet in order to be able to qualify to apply to become self-insured. 72-319, this is your penalty for failure to secure compensation. Essentially what happens is if you have employees and you fail to obtain a work comp policy, first and foremost, it is a misdemeanor. And the other thing is you could be issued penalties, which could be either at a rate of $2 per employee per day or $25 per day, whichever is greater. Rule of thumb, I always tell employers, if you have 13 employees or more than likely it's going to be the $2 per employee per day. 72-311 is your notice of security. Essentially, this states that all policies are to be filed with the Industrial Commission as well as all policy cancellations. Coverage options. The cost of insurance is, the insurance premium itself is based on payroll and does vary accordingly to the type of business or work being performed. Adding to that as well, it also varies on the surety or the insurance carrier that is writing the policy. They could have slightly different ones as well, different premium prices. But for an example, office employees classified under 8810 on average is about 21 cents for every $100 in payroll, whereas iron or steel construction, less than 2 stories, classified under 5059 is on average $19.24 for every $100 in payroll. As I mentioned, private insurance, you can obtain a policy via one of the 300 plus authorized carriers, and the first step on that is just contact any insurance agent. They'll get you started with that. And if you need to access that list of the carriers, it is located on our website, which is www.iic.idaho.gov. And adding to that, the one requirement once your policy is issued to you by the insurance carrier is it has to be filed with a certain database electronically, and that's the National Council on Compensation Insurance database, or NCCI for short. The Industrial Commission uses that database to officially validate and verify work comp coverage. Unfortunately, we can't really accept a paper copy of it. It has to be filed electronically on NCCI. Sorry, via the NCCI website. The good thing is you as an employer normally don't have to do that. That's done by either your underwriter or your broker, your insurance broker, or your insurance representative or the insurance company themselves. They're the ones that handle that for you. We just like to remind the employer, hey, once they issue that policy, remind them to get that policy on NCCI. That way it doesn't cost you any problems down the road. And as I mentioned, the State Insurance Fund is possibly the most commonly used insurance carrier in Idaho. They write about 70% of all policies, Idaho policies, and they mostly work with small businesses. And in order to work with them, you can either contact them via an agent or contact them directly. If you are denied coverage by 2 separate insurance carriers, You can then apply for a assigned risk pool policy, which is through NCCI themselves. Same thing, contact an insurance agent to get that application going. But however, what the assigned risk pool or policy from that is for employers who cannot secure coverage from private carriers. It's a guaranteed policy for, normally we see it for newer businesses that are completely new and have no previous record. Normally they're the ones that get assigned to the assigned risk pool. It is a 60% surcharge, but it is a guaranteed policy. And the good part is once you complete that term with them and their conditions, more than likely they will deny you coverage through that pool again. But you can then at that point apply for a private a policy for somebody else at a much cheaper rate, and more than likely you'd be approved at that point. Title 72-212, this is your exemptions from coverage. Exemptions from coverage are specifically listed in statute. We do not provide employers with a certificate of exemptions. We just document it in our database for future reference. And here are some of the exemptions. Now, they are going to vary based on the type of business or how the business is structured. For example, if the business is an LLC, limited liability company, or a partnership, exempt employees or workers would be those that are working members of the LLC or working members of the partnership that must have legitimate ownership in and not just in name only. And by that we're referring to, we need to see something in writing that states they are indeed an owner. We normally do this type of verification via the Idaho Secretary of State and the annual filings. So it is a good habit to get into, listing all the LLC members and partners on your annual filings, even though you're not required to, but it's a good habit to get into just in case you end up getting asked for this information by the Industrial Commission in order to verify that they are indeed exempt employees or exempt owners. Sole proprietors, or you're doing business as your DBAs, would be the sole proprietors themselves, the owners, as well as employment of certain family members that must be living in the same household could be considered exempt. And the same can be applied to in terms of those certain family members for any LLC that is a single member LLC taxed the sole proprietorship. In other words, there's only one LLC member, and you're taxing it with the tax commission IRS as a sole proprietorship. Yes, as a sole proprietorship. And those family members are going to be essentially your the owner's parents, grandparents, the owner's spouse, their children, spouse's children, has to be legally married to. Can't be unfortunately engaged or girlfriend, boyfriend, as well as your grandchildren and then your spouse's grandchildren. Anything beyond that, so great-grandchildren, unfortunately don't count, as well as brothers, sisters, aunts, uncles, cousins, unfortunately are not considered exempt. And again, they have to be living at home with that owner, LLC member, or sole proprietor. Corporations, so corporate officers that have a corporate title such as president, CEO, CFO, and also must own at least 10% of the stock. And if there is a board of directors, must also be a director themselves, would be considered exempt. The third bulletin point there, so the board member or director, if there is no board of directors, then we don't take that into account. That's just kind of a if scenario. And then a couple other exemptions are going to be your household domestic service. So the caregiver, for example, you have an elderly family member and you hire somebody caregiver to take care of them. The work must be performed solely on that individual's property. However, there are some exceptions. For example, if they need to run to the grocery store for them and buy them the groceries every week, that's perfectly fine. But the other thing too is they have to be paid from that individual's personal account. It can't be a business to individual payments, unfortunately. Casual employment, this is going to be any type of employment that is not on a consistent basis and is not directly related to that business's day-to-day operations. A good example is a small mom-and-pop restaurant that during the holiday season, they like to have their windows on their restaurant painted with little holiday decals, snowmen, all that fun stuff. They hire somebody to come out and do that for them. They would be considered casual employment and would be exempt from work comp because they're doing something that's not on a consistent basis. So they're going out there once, painting the little decals and calling it a day, and it's not directly related to the day-to-day operations of the business. So where the business is a restaurant, painting window decals for one day is not related to the restaurant work. Employment of outworkers, this is going to be, for example, if you have a small boutique shop that is selling clothing and they decide, hey, we're going to, for this one sale event, we're going to sell homemade dresses. However, we don't have the time to make the product, but we do have the supplies. If you hire a seamstress to do this job, one time, not on a consistent basis, provide them the clothing, the fabric, everything, in terms of the actual fabric. They make the finished product, and then they return the finished product back to the business so then they can sell it. That would be considered employment of outworkers. Volunteer, ski patrol, and officials of athletic contests, pretty self-explanatory on that. And independent contractor or employee. So employee misclassification is pretty important. We do run into that quite frequently. So whether someone who works for you is an employee or an independent contractor is an important distinction, though it might be tempting to save some money by classifying workers as independent contractors. This classification can have some serious financial and legal consequences. Please know the difference. And the good part is I get to explain the difference. So with an independent contractor, they're normally individuals who provide services or goods to another entity under terms specified in a contract. Generally speaking, independent contractors retain control over their schedules, number of hours worked, jobs accepted, job performance, and how the job is ultimately completed, whereas employees normally work at a schedule that's required by their employer, and their performance is usually directly supervised by the employer themselves. It comes down to, in terms of an overall view, it comes down to who's controlling this individual's workday. Independent contractors, as I mentioned, they normally get to control their workday. They dictate their own hours, the times, the dates. They bring their own tools and supplies. They're normally trained in the work that they're doing. They don't need to provide additional training by somebody else, whereas the employees, the opposite. Their workday is normally controlled by the entity or by the employer themselves. Going into a situation, for example, where a employer has workers and believes that they are independent contractors and not employees, the Industrial Commission conducts a test that we call the right to control test. And essentially what that is, it's a set of questions broken down to 4 subsections that help determine or help make that distinction on, hey, is this individual independent contractor or an employee? The worker status is determined based on those 4 main criteria, commonly referred to as the right to control test. Considered collectively, these factors distinguish an employee from an independent contractor. This approach neither prioritizes criteria nor specifies a minimum number that must be met. The Idaho Supreme Court has repeatedly stated that cases where there is doubt are to be resolved in favor of finding the worker to be an employee. And that's more of a better safe than sorry scenario. And it's better to just have that policy in place in case somebody gets injured. You're covered, the worker's covered. You're not having to face additional penalties issued from the Industrial Commission due to lack of coverage. Now, the right to control test, as I mentioned, is broken down into 4 criteria. None of them have hold more weight than the other. We take all 4 of them into consideration respectively equally, and we also we take it case by case. But the four pillars, as we call them, are the direct evidence of right to control, your method of payment, furnishing of major items of equipment, and the right to terminate relationship without liability. The first one, the direct evidence of right to control, this is going to ask questions about who's controlling the worker's workday. You know, are they able to set their own times? Are they able to go to lunch whenever they want? Can they pick the days that they need to come in? Are they having to report their daily work to somebody? You know, with an independent contractor, more than likely, no, they're not having to provide the general contractor, you know, daily updates on what's going on, or they're not having to be supervised by the general contractor. They may report, you know, a status update on how far the job is completed or what else is left, but for the most part, they're able to retain control over their own workday. And also adding to that pillar are also going to be questions that also ask, you know, about training. You know, are these individuals being trained by the employer, or in cases of independent contractors, they're specialized or they're specialists in their own field, so they normally don't need to have that training by the employer. The second pillar is your method of payments. This is going to talk about how are they being paid. You know, we're talking like in a normal employee, which would be, you know, hourly, salary. How frequently are they being paid? You know, bi-weekly, every 15 days, every other Friday, every week, every month. Whereas independent contractors, it's mostly not on a consistent basis. You know, they submit the bid for a work, and they work out how much it's going to be for, you know, per square footage, per the work completed, you know, and then in terms of payment, in most cases it's business to business, as was mentioned with the previous presenter. Independent contractors normally have their own businesses, so when they're receiving payment, it's a business-to-business payment, whereas employees, it's mostly a business-to-individual payment for work that's performed. And then this section 3, furnishing of major items of equipment, who's providing tools and supplies, specifically speaking, the major tools and items needed to complete the job. In cases where it's an employee-employer relationship, that's normally provided by the employer. Independent contractors, they bring their tools and their own supplies. And then the last pillar is your right to terminate relationship without liability. Can this individual terminate their employment without any liability, or vice versa? Can the employer dismiss the worker without any liability? In Idaho, being a right to work state, normally there wouldn't be no liability, whereas if it's an independent contractor, there could be a possible breach of contract. Here are some quick facts about independent contractors. IRS Form 1099. We do run into this quite frequently as well too, but reporting wages on a 1099 form is not by itself an indication of independent contractor status. That's where that right to control test comes into play. In exemptions, I mentioned there is no certificate of exemption in Idaho. Statutory employers. Contractors may be liable for compensation to an employee of a contractor or a subcontractor under him or her who has not complied with the law 72-216. Essentially what that states is if you decide to hire or subcontract work and they bring employees under themselves, they would be required to carry a work comp policy if those employees belong to the subcontractor or are working for the subcontractor. However, if there's no policy in place and an injury happens to one of those employees, it goes up the chain of command per se. So the claim will then be filed with the next person up, which would be the general contractor in this case. So you could then thus become what we call a statutory employer, where you would then take on your work comp policy would take on the insurance claim. However, penalties for failure to comply with the work comp laws won't be normally issued to the statutory employer, but rather the employer that had the employees and no coverage. So in this case, the subcontractor. And lastly, the cost of no insurance. In Idaho, there is no public safety net for injured employees of an uninsured employer. Without insurance, the injured worker's recourse is against the uninsured employer personally. Long story short, if there's no policy in place and the employee gets injured, there is no public safety net. The employee would then have to sue or file a lawsuit against the employer for any lost wages and benefits, which again, that goes back to that exclusive remedy benefit that the employer gets for having that policy in place. These last two slides are going to be some misclassification examples. The first one is a small claim such as a foot crush, and it's on the left-hand side is a breakdown of it. In this example, would cost $8,738 for this small claim. You factor in the uninsured employer penalty, which is calculated at 10% of that $8,738 for $873 for a grand total of $9,611. Whereas if you would have had the premium in place, which is on the right-hand side, would cost you about $3,681. It's a little bit of a difference, $6,000. But where we see more of a bigger difference is on larger claims, such as a knee strain. In this example, this large claim cost $122,256. Factor in that 10% penalty cost for being an uninsured employer, which is $12,225, for a grand total of $134,481. Whereas if you had that premium or the policy, it would cost you $3,785. And with that being said, that is everything I have. If you have any questions for me, otherwise, thank you for having me.
Thanks, Luis. I don't see any other questions, so.
Thank you.
Yep. So we'll take a couple of minutes. We're down to the last person, so that's Irene with the Small Business Administration. How about just 2 minutes so I can get her in here? And then we'll carry on, okay? So a couple minutes.
I'm trying to multitask.
I see that. Are you ready?
Okay, guys. Am I on?
Yep.
Sweet. Okay, I am pulling up the rear, and I'm probably standing between you and lunch. So, you've heard from great organizations who have some fantastic information, especially on the compliance side. So I'm going to follow up and just give you a few points to add to that, to all those nuggets that you got today. So these are kind of your checklist to reevaluate where your business is and see where you're at and look for ways for either improvement or update. So know your cash flow, take a look at your financial plan, see where you're at, take a look and see if there are ways to reduce expenses. And if you aren't already doing this, check your financials weekly. If you are doing it once a month, you've got 3 weeks that you aren't sure what's going on, and you want to make sure that you're keeping up with those end of month expenses. Look for ways to collect payments quickly. You know, if you're doing electronic, if you're sending out invoices, maybe, you know, if you've got net 30, if there's a way to do 10, or maybe collect half up front and then collect the other half upon delivery. But look for ways to collect payments quickly. Electronic payments, plan ahead for those cash flow shortages. So look at 3 to 6 months of your basic operating expenses to put in a reserve. So just like you would a personal savings, have a business savings. And most importantly, do the research for your business needs before obtaining financing, before you need it. So that's why it's important to have a financial plan in place, not just your pricing, but where am I at financially? And then where am I going to go for access to capital? How much is there that I need? What am I going to use it for? What happens when I run out? And what's the documentation that is needed? So take a look at your banks. There's credit unions, there's micro lending, there's alternative funding. So look for options that are going to be most successful for you and attainable. Second one, stand out from a crowd. So reevaluate your marketing plan and your brand. Make sure that you differentiate yourself from your competition. Come up with that unique value. So reassess, what are your customers needing? What do they want from you? So keep adding something new, and that doesn't necessarily mean services or products. It could be maybe you are adding a blog to your website or your offering. Maybe you're adding a new partnership with a new business or community organization or a nonprofit for collaboration. Keep in mind that every business is a resource and an educator. So educate your customers something about your business or its offerings, so you're giving them more than just that product or service. So you're promoting the end result, which is the experience, so focus on the experience and the benefits, and anticipate change. Things are always going to be happening. It's the environment, it's the culture, people's spending habits, and so be prepared to adjust and put things in place to be proactive versus reactive. So don't confuse that price and value. People are willing to pay the higher price if they feel that they are getting a value, the experience, and benefit from it. So create that unique proposition. If you aren't selling online, consider that as an additional revenue stream. And when you're looking at marketing, think of these 4 E's. Entertainment. Keep your marketing lighthearted. If you have an opportunity to make it funny, humorous, look for ways to do that. Look for ways to do videos. Those could be fun ways to do that as well. Be engaged with your customers. Be personal. And post pictures that show your staff or show people doing something with regards to your business. So you can see that these are real people and the experiences that they're having. Provide that education and as well as that experience, because we buy things based on the experience and how it makes. So really emphasize that. Third one, think of how your business is growing. So hopefully you have these in place. So I would encourage you to put a 1-year plan, a 3-year plan, and a 5-year plan in place. So what will you be doing over the next 12 months? And then your growth plan, and maybe this is something that you plan to do in year 5. Look for ways that you would like to see your business grow. You can't do it today, but you'd like to do this. And again, there's nothing set in stone, but focus on your niche. Don't try to be everything to everyone, but what is your niche? And what are those steps that you're going to take to make that happen? And how are you going to grow? Look for the best opportunities. What resources do you need and what financial resources do you need to get there? And always look for ways to collaborate. So you keep in mind, you should not be doing all the marketing yourself. Look for ways to collaborate with other businesses, community organizations, nonprofits. There's lots of sources to have other people help you market. And then look for ways to tap into new sales and delivery channels. Start with the easiest steps first so that you don't feel overwhelmed. And if you have a supply of inventory, that's the best way to make sure that things are running out the door. So manage your inventory, because if it's sitting on the shelf, it's not making money. So continue to push those through. So be prepared. Plan and manage your business. Don't let it control you and you just are trying to, manage those chaotic days. Plan and manage, set priorities, and be organized. Okay, 4th one, know your customers. So stay responsive, connected, identify and rework every problem, and embrace new approaches. So connect with your clients, your customers. Switch your mindset from product or service focused to customer focused. What do they want? Why do they come to you for your business services or your products? Really understand them. Talk to your customers. Get some feedback. Do surveys. Maybe post a comment that generates that response on social media, and then ask the same questions throughout all your channels. Maybe you're going to add a new service. Hey, would you guys be interested in this method or this particular service? Or if you want to add a new product for the holidays. So get feedback, get to know your customers. If you're going to add something new, test the market, get some feedback from your new and existing customers. It could be through focus groups, free samples. We always like to know what it's going to be like before we try it. And you see a lot of people have, everything from swags at those expos or fairs. You see lots of trade shows. You see lots of, like if there's events going on, you see booths everywhere. So people do want to test it before they try it. Or give me an example. Maybe you got a 30-minute free session that you're going to offer. Be a sponsor. Everything from look at schools, look at nonprofits. Kids are always looking for sponsorship for their clubs or organizations. So that's a really easy way to get your name out there. You can be on the back of a shirt or a banner. Do surveys. So test the market, see what is out there, look for ways to keep your customers engaged and keep them coming back. What else do you have to offer them if they've already came to you once? So look for other ways to stay connected to them. If you've got employees, so hopefully you've got a lot of employee tips today. Be the manager, not the technician. So as that business owner, you're looking for ways to work on the business and not in it. And it is hard in the beginning, but once you put those steps in place, you need to be spending your time on what is going to drive you revenue. So maybe that's customer services, or it's going out and talking to vendors and suppliers, or go making those connections. And it is hard to have that strong team, and it's going to take some time so that you're attracting the right applicants. In this day and time, it could be spending money on the salaries, but at the same time, it's having flexibility, making sure people have those work-life balances, and looking at personality versus skill. People can be trainable. Are people able to adjust to your brand and your ethics and your vision for your business? Set goals for all your employees so they feel like, I know where I'm going within the company. That's what people are looking for. They want to feel like they're able to contribute, that their work matters and they have value. Provide training. Let them know that that's available. You want to help them grow within the company. And by doing that, you're going to create an engaging business culture. You don't build a business, you build people, and then people build the business. So focus on your people. A lot of times we're concerned about getting new people in because we want to keep up with the demand, which is yes, but at the same time, don't forget about your existing employees. Keep them happy, keep them engaged, keep them motivated. Continue to convey your vision to them. Let them know this is what our company stands for. This is what you as the owner believes in, and your team will be on board. It all sums up to being respectful, provide that recognition, everyone from the person who answers the phone to the person who responds to those emails and the websites, and the people that are out there making sales. Look at benefits and flexibility, and maybe the benefits are we could get out on Fridays early, or maybe some people like to work later in the evening and come in later during the day. So talk to each person individually and find out what are their needs. How can you be flexible with them? And do value every person and talk to each one individually to see where they're at. There's not a one-size-fits-all. 8, so be flexible and ready for change. The environment's changing. As I mentioned, culture's changing, buying experiences. We have a lot of out of our control things that are happening. So be open to the needs of your business, and with your employees, hold those meetings at least monthly, but come in with an agenda. Come in with, this is what we're going to talk about. When we're done, these are the takeaways. This is what I need everyone to do, and then have those follow-ups. And do talk about what's working, what's not. You can't fix it if you don't know that something's broken. And people need to address the things and come up with a solution, and then make sure that that solution is documented so that everyone knows what is to happen next. And then talk about what are the trends and the feedback from those surveys that you did, from those responses, and talk through those and say, hey, what do we need to do? How do we need to adjust? What do we need to fix? And then the last one. So I joke, it's like, who's Yoda? Some people don't know, but if you're a Star Wars fan, he's the mentor. So as entrepreneurs, you are constantly and consistently learning. So use the wisdom of others. So I've always been told, surround yourself with people who are smarter than you. Right? You don't have to know everything, but just have people around you who can help you through those either challenges or introduce you to some of those paths. So people you admire, network with investors, business consultants, surround yourself with positive influences, join organizations that can lead to collaborations. So look for people who can help you with your business, because you are not in this alone. There's lots of places that you can connect with folks. You've got 4 here today that you can certainly connect with, and here are some more that you can connect with. We have SCORE, the Small Business Development Center, and we have a Women's Business Center. They are resources of the SBA, and the SBA, we are here to provide you everything from starting to expansion, government contracting, financing, and we do that through free business consulting through our partners here. And you can meet with them as often and as many times as you'd like. They offer workshops like today on their site. So if you go to score.org, they've got on-demand trainings and videos, and I watch theirs all the time. I was at an event yesterday for the Women's Business Center, the SBDC. They've got mastermind groups. So lots of great opportunities to help you with your business and interface with like-minded businesses. So hopefully you're able to connect with those sources as well. And there's also this idahobizhelp.idaho.gov site, this resource wizard. This can help you reach out to different resources within the community. If you're looking for financing, you're looking for chambers, there are incubators that are out there, development organizations and rural communities. So use these resources to help you stay connected. If you need to expand your business, there is help. And if you have something unique, feel free to reach out to me. Here's my contact information, and I'm happy to direct you to where you might find some resources for your existing businesses. So as I mentioned, reach out to any of our business consultant groups. It is a free service, and we're here to help you with your business. So thank you, Steve.
Thanks, Irene. Some great information there. Does anybody have any questions? But I tell you what, I'll leave the room open for a few minutes. So if you are typing a question, you get a chance to finish that. Just remember that the material that we presented, along with a bunch of handouts, are available from that link that I sent you. If you click on that, you get into the regular registration page. You scroll down to the bottom. The information for downloading is there. If you do run into any issues where you can't get it, if you send me an email at taxtraining@tax.idaho.gov, it's in the very top of the chat window, that email address, I can send it to you in PDF format, okay? I want to thank you for attending, and for the 4 of you who stuck it all the way through the end, thank you very much. This will go ahead and end it for us today. I'll leave the room open for a couple of minutes, and thanks. Thank you, everybody.